So, hey guys, so I'm here today to share one of the most important concepts that we need to tackle and that will change your trading from 0 to 100. And this is about trading with a trend and identifying a trend. So, we've had this concept that every single time we are told, uh, trade with a trend, trade with a trend, trade with a trend. But what is trading with a trend? How do you even identify that trend? How are you able to maintain that trend and stick by it and make profits from it? So today I want to show you a very simple way that we can actually just do this from our side and we'll be able to cater for it simply and understand the concept 100%. So my example for today will be EurJpy. This is one of the currencies that is well regulated and stable, so we can be able to get very definitive trends from it. And it's one of the currency pairs that I focus on. So let's start with the basics. Yeah, what makes up a trend? A trend is made up of higher highs and higher lows. Yeah, so that is what makes up a trend, or lower highs and lower lows. So if you're new to trading, this is one of the concepts that you must have had a couple of times. All right. When we're discussing about an uptrend, we check on highs and lows, highs and lows. When we're talking about a downtrend, we talk about lows and highs. So when a market breaks structure, yeah, from one point to the other, yeah, the market could have been moving in whatever direction it could be moving. But once the market breaks structure and forms a low lower than the previous one, we say that we're just entering a downtrend. Okay, let's have an example. Okay, let's have a very basic example. Very basic example. Actually, uh, layman example. So if we were going up, yeah, assuming we were going up, you're going up, yeah. Then all of a sudden, the market comes down up to this point. Does that mean that we're no longer in an uptrend? No, we're still in an uptrend. What if it comes up here, yeah, then goes down here? Which trend are we in? We're still in an uptrend. Why? Because we don't have a lower high and a lower low being formed. So even if it comes here, yeah, then comes back here, we are still an uptrend. The only time we will violate this uptrend is when we have a low that comes, then comes back up, violates this low that was created and goes lower than it. We are still in an uptrend. Then we try to go above and it fails to make an uptrend and violates the the lowest low that was created and goes further down. Now, there we say that we have changed our direction from an uptrend to a downtrend. Why? Because this low has violated the most recent low created. And this is what basically you'll be finding in the market. You'll never find a market that is very well uh, drafted to go directly up or directly low. Otherwise, people will never be failing in the markets. I know I have gone through this and it was a very tedious task being able to identify a trend. All right. So let's go. Knowing this concept and knowing that we have to violate a low and a high before we change direction, let us see how we are able to identify easily a trend in any currency. Remember, we will also remove another series on structure, and now we will explain deeper on how these structural changes do affect the market. So, for today's series, I'll be just showing you how we are able to identify easily on the word go a trend or which trend to follow. On my previous video, we focused on support and resistance, and I was able to show you how I map out my support and resistance areas, and we were able to identify the GBP USD trade that was able to go up. Now, this on this series or this how-to series of reading the markets, I'm going to show you how I personally identify my trends. So I normally prefer using the weekly because on the weekly we're able to see a very large um, notion of how the market is moving. From there, I zoom out. I zoom out to the lowest and the lowest and the lowest of market changes. So now I have a market change from 1972, when this data was recorded, to 2023. So let's see what has been happening. So back in 1976, 1973, the market had begun going up, right? Went down again, then came up, then down again. Remember, nothing has been violated since, yeah? No lower low has been formed. Then we go up again. Now we're seeing pressure leaving this market. Then we fall and collapse. So now we're in the verge of entering a downtrend, but the downtrend has not yet been confirmed because the market can still go back up. However, we see a lower high being formed, and not only that, another lower low being formed, which identifies that EurJpy was on a downtrend. Okay, here we go back up, go down on a downtrend, then go back up. Now we see something different. We see this low has been violated. All right, this high has been violated, and now we have a higher high. Then still we're on a downtrend. However, we come down. Again, we see something different. We see that the lower low has not been broken. So we have a higher high and a resistance of a lower low. We see this lower low, no, this low not being lower. And we see the market shoot back up. So once it shoots back up, it goes down. All right? Still, we're not creating another low. The market now starts proceeding going up. So we are looking onto this level for our market to find support or resistance, sorry. And now we can identify that we are going up in this market. The EurJpy market is a very bullish market currently. Right? So from there, from identifying that from the bigger picture that we need to go up, I zoom in. I zoom in. So that was just the major trend. So after zooming in, we can identify that there are smaller trends in this. And following the same premise and the same principle, we can be able to tell where we are and where we're going. So now here I check on the most recent um, retracement, which is this most recent big retracement there. So from 2020, the market broke out of this serious resistance area and started rising. Rose then dipped, rose again, dipped, breaking structure, forming new highs, new lows, new high, new low. This was able to dip to this point over here. We'll dip to this point over here after a push phase that occurred. So that push phase had occurred from around this point. So now we can identify that we were on a push phase, it retraced but did not form a new lower low. However, we are heading to form a new higher high. And if you can check from the candlestick, this weekly candlestick is very bullish according to what we are able to form. A double bottom or a triple bottom, then a shoot upwards. This means that for the next couple of weeks, we will have a very bullish market where our uh, targets will be up to 168.550. Yeah, that is where I'm looking to exit my uptrend when it comes to EurJpy. All right. Um, I'm not sure how this recording has gone, but I really want to thank you for sticking along up to here. Feel free to ask any question that you'd like, and I'll answer you comfortably in regard to anything that you may want. And with that, have an amazing day. Take care of yourself. Feel free to hit my comment section. Goodbye.